Welcome back to Money Mindset. Today, we're going to take a look at index funds. What is an index fund? Well, an index fund is a type of investment fund designed to track a specific market index, such as the S&P 500. Think of it as a way to invest in a broad portfolio of stocks or other assets without needing to select individual investments. Exploring other types of funds. Index funds aren't the only option out there. There are various types of investment funds, each with its own approach. You've got actively managed funds, which have managers selecting specific investments, and then there are exchange-traded funds, ETFs, which are similar to index funds but trade on an exchange like a stock. Historical returns on index funds. Let's talk numbers. Index funds have gained immense popularity due to their historical performance. Over the long term, many index funds have delivered solid returns that often outperform actively managed funds after accounting for fees. This can make index funds an attractive option for investors seeking a more passive investment approach. Here's a general overview of historical returns for some well-known stock market indices. S&P 500 Index. The S&P 500 is often considered a benchmark for the U.S. stock market. Its historical average annual return has been around 7 to 10% after adjusting for inflation over several decades. Dow Jones Industrial Average. The Dow Jones is another widely recognized U.S. stock market index. Its historical average annual return has also been in the range of 7 to 10% after accounting for inflation. Nasdaq Composite Index. Focused on technology and growth-oriented companies, the Nasdaq has historically exhibited higher volatility but has also offered higher potential returns. Its historical average annual return has been higher than other indices, ranging from 9 to 12% after adjusting for inflation. It's important to remember that these are average returns over long periods, and actual returns can vary significantly from year to year. Automating monthly deposits to your fund. Now that you understand the basics of index funds, let's discuss a practical approach. One fantastic advantage of index funds is the ability to automate your investments. By setting up a monthly deposit, you can take advantage of dollar cost averaging, a strategy that can help reduce the impact of market volatility on your investments. The long-term strategy of index fund investing. Remember, index fund investing is a long-term game. While short-term market fluctuations are common, the historical trend has shown that markets tend to rise over time. By adopting a patient approach, you can potentially benefit from the compounding effect and enjoy the growth of your investments. If you enjoyed this video, don't forget to give us a thumbs up and hit that subscribe button for more financial insights. Until next time, happy investing.